Most traders will look at this Australian dollar to US dollar chart and see a dead cat bounce. They'll fade the rally, pile into shorts, and then wonder why they got run over by Wednesday. The truth is, the real money this week is being made not on Monday's wick, but in the 3 to 5 day positioning trap that the RBA is about to spring. This is the Australian dollar, and it's coiled at 0.6941 as I speak. That number is not random, it's the exact weekly pivot, and it's the fulcrum for the entire next 5 days. Stay with me, because I'm giving you the only 2 Monday scalps that respect the real liquidity pools, and 1 swing trade that can catch the RBA wave from 0.69 to 0.71 if the cards fall right. This week has 1 danger zone that could flush the pair back to 3-month lows, and 1 3 to 5 day breakout that will leave the late shorts in absolute pain. I'll show you both right now. Instant weekly verdict. The structural bias for the next 3 to 5 days is a transition from a weekly sell to a daily buy, meaning we are fading the recent downtrend but only on confirmation. Right now, the weekly trend is still technically a sell, the daily is a sell, but the 4-hour chart is screaming strong buy and the monthly is a monster strong buy. That tells me this correction is getting exhausted. The single invalidation level that flips the whole week bearish is 0.6843. Write this number down. If the Aussie closes any day below 0.6843, the monthly structure resets, the 200-day moving average at 0.6727 becomes the magnet. And all long swing bias is off. But here's what the herd is doing. They short. Commitment of traders data last week showed speculative shorts building into this dip, and retail sentiment on multiple platforms is overwhelmingly bearish. That's exactly the fuel for a liquidity run. When the RBA holds rates and the dollar softens on ISM, the squeeze will launch from just below 0.69 and hunt every stop above 0.70. That's the week's game. Let's go to the charts and I'll show you the hidden divergences that will matter by Wednesday. Pull up the weekly chart. Price has been grinding lower from the 0.7135 resistance area, and it closed right on the 20-week moving average, which is coming in at 0.6998. The 200-week is far below at 0.6727, still sloping up, so the macro trend is intact. MACD on the weekly is still positive but rolling. The line is at 0.006 and the signal line is above, but the histogram is shrinking. That's not a bearish reversal. It's a momentum cooldown inside a bullish structure. On the daily time frame, the MACD is buried below 0, but the fast line is starting to curl. Williams %R is at -76, deep in oversold territory, and the stochastic at 37 is starting to cross higher. The ADX is at 34, telling you the daily trend is strong, but the CCI at -117 is screaming mean reversion. This is where daily sellers get trapped. The daily moving averages. The 50-day at 0.6856 is rising sharply, and the 100-day at 0.6731 is converging with the 200-day at 0.6727, a golden cross on the horizon. That's why the monthly is a strong buy. This week, the 20-day MA at 0.6998 is the line in the sand. A daily close above it activates the swing, and the whole picture shifts. Here's what most traders won't realize until Wednesday. Drop to the 4-hour chart, and you'll see a bullish hidden divergence. Price made a lower low last week near 0.6870, but the MACD histogram printed a higher low. That divergence is exactly the kind of signal that precedes a rapid 150 pip rip when a catalyst hits. The 4-hour strong buy trend is already in motion, with the 60-minute neutral simply digesting Friday's bounce. The 60-minute chart is oscillating around its 200-period MA at 0.6935, just ticks below current price. So Monday's session will be a battle for that 60-minute anchor. If we hold above 0.6935 in early London, the 4-hour momentum will take control and aim for the daily resistance. The weekly support levels are clear. S1 at 0.6843, S2 at 0.6786, and the ultimate floor at 0.6697. Resistance, R1 at 0.6989, R2 at 0.7078, and A3 at 0.7135. The weekly pivot, 0.6932, is acting as a magnet all of Monday. This is a textbook compression setup before a calendar event, now the fundamental driver and the weekly calendar. This is where the narrative web gets woven for the next 5 days. Over the weekend, the dollar lost steam as Fed rate hike bets eased further. The market is now pricing in only a token probability of a July move, and that's allowing the Aussie to breathe. Monday brings US ISM Services PMI. If it prints soft, the dollar will crack and Australian dollar to US dollar will test 0.6989 immediately. Tuesday, however, is the week's fuse. The Reserve Bank of Australia interest rate decision at 4:30 Greenwich Mean Time. The market expects no change at 4.1%, but the language around inflation and the labour market is what will move price. If the RBA retains a tightening bias, or even hints at a hike later this year, the Aussie will rip through 0.70. Wednesday we get Australian retail sales, which will confirm the consumer strength. Thursday US jobless claims, and Friday the preliminary University of Michigan consumer sentiment. So the path is, Monday ISM prepositioning, Tuesday the RBA explosion, Wednesday retail follow through, and then a drift into Friday. My directional lean for the entire week is bullish, anchored on the RBA hold and a softening dollar. The exact invalidation of this bullish thesis is a rate cut or a directly dovish statement that sends the pair below 0.6843. That's the line. Now, I want your input. Do you think Australian dollar to US dollar closes Friday above 0.70? Comment yes or no right now. I'm tracking the consensus for the RBA aftermath. Most people skip the planning phase, they jump straight to entries. That's exactly where this week's money is made. I'm about to give you 2 Monday scalping strategies and 1 3-5-day swing. Keep watching, because each one has an exact on-screen trade card that you can screenshot. Strategy 1, the Monday opening scalp. This is a high probability snipe for the first 3 hours of the week. The logic: the market will try to establish value above Friday's high, which I'm setting at 0.6960. Here's the trigger. If price retests 0.6960 and prints a firm 5-minute candle close above it, you go long. The stop loss is tight at 0.6945, just beneath the European Open VWAP. Take profit 1 is 0.6989, the weekly R1. That's a 1 minute and 1.6 seconds risk reward. If the break is clean, you can let a runner hit 0.7000. Void the whole scalp if a 5-minute candle closes back below 0.6950 before triggering. No follow through, no trade. This is about precision, not hope. The Monday opening SCLP entry, 0.6960, 5-minute candle close above Friday's high, stop loss, 0.6945. Take profit 1, 0.6989 risk, reward, 1:1.6 R invalidation. Void if 5 minutes closes below 0.6950. Strategy 2, the Monday liquidity grab. This is a counter-noise scalp that hunts the stops just above Friday's high before the real move. The Asian session has likely built a quiet range around the 0.6935 level. If we see a sudden spike above 0.6965 that gets rejected within 15 minutes, a classic stop hunt, you short the snapback. Entry is on a 5-minute close back below 0.6960 after the wick. Stop loss goes above the wick high at 0.6975. Target is the nearest liquidity pool at 0.6930, just under the weekly pivot. This requires aggressive execution. Don't marry it. If the spike holds and we see acceptance above 0.6965, abort immediately. The liquidity grab failed and the bulls have control. On screen. Graphic, the Monday liquidity GRAB entry, short on 5-minute close below 0.6960 after a fake breakout above 0.6965. Stop loss, 0.6975, above wick high, take profit 1, 0.6930 risk, reward, 1:2.0 R invalidation. Void if price holds above 0.6965 for more than 15 minutes now. The one that matters for the whole week. Strategy 3, the 3 to 5 day swing. This trade is built for the RBA release and the daily trend shift. Bias, long, in alignment with the monthly strong buy and the 4-hour momentum. Trigger condition. We need a daily close above the 20-day moving average at 0.6998, with the daily MACD histogram ticking higher. Ideally, this happens Tuesday or Wednesday. Entry is at the daily close itself, or on a retest of 0.6980 as support the next session, but I'll give you a clean level, 0.6980 limit order after the bullish daily close. Stop loss must sit below the weekly structural level. Place it at 0.6835, just under S1 at 0.6843 and below the 50-day MA. That gives the trade room to breathe through the retail sales number. Take profit 1 is conservative at 0.7078, the weekly R2, for a quick 90 pips. Take profit 2 is the stretch target at 0.7135, the monthly high area. Risk reward on the first target is 1 minute and 2.2 seconds. On the full stretch nearly 1:4. Once price clears 0.7030, move your stop to break even and trail it by 40 pips on a daily close basis. This swing is instantly voided if the Australian dollar to US dollar closes any day below 0.6840, or if the RBA cuts rates, no IFS, no buts day 3 to 5 days of NG entry, 0.6980, after daily. Close above 0.6998, limit on retest, stop loss, 0.6835 take profit 1, 0.7078 take profit 2, 0.7135 risk, reward, 1:2.2R, TP1, 1:4.0R, TP2, invalidation. Void if daily close below 0.6840 or RBA cuts. Are you scalping Monday or swinging the week? Comment scalp or swing below. I want to see who's built for this Asian proxy volatility risk management pulse. Never risk more than 1 to 2% per trade. With the RBA on Tuesday, any position held into the news requires half your normal size. Volatility will gap. Stops are non-negotiable, especially on the swing below 0.6840. That level is your survival line, close and retention loop. The single most critical level to watch for the entire week is 0.6989. A daily close above it opens the door to 0.71. A rejection and a drop back below the weekly pivot 0.6932 sets up a retest of the 0.6843 danger zone. This week's finale on Friday will be all about whether the bullish momentum can hold through US consumer sentiment. If that number surprises, we could see a violent Friday reversal that flips the monthly trend. I'll have the updated blueprint for you this Sunday, recapping everything and setting up the next week's plays. If you want to see last week's Australian dollar to US dollar breakdown, where we caught the 0.70 rejection exactly, tap the end screen now. That video is live and feeds the full narrative. Then hit the bell so Sunday's next week ahead alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you there. Levels that define your week.